Hey, good day, guys. Let's talk about in terms of trading breakout patterns, which is one of the more popular patterns, and one of the patterns where you can actually tell right after you enter the trade quickly whether your trade is going to work or is it not going to work. Because it's one of those patterns where you get results. If you're a day trader, you get results if you trade on depending on what time frame you trade in, whether it's 5 minutes, 10 minutes. Usually within the next 30 minutes you will know whether you will be sticking with the trade or you'll be cutting it out. If you're trading on a daily time frame, you will know pretty fast as well whether the trade is going to work out or not. If it's not going to be a breakout pattern, then chances are it might be a failed breakout pattern, right? So you can try to trade it both ways. So that's why it's kind of pretty key to have understand the breakout patterns if you want to trade it in the direction of the trend. If it doesn't work out, you can always flip it and treat it like a failed breakout. Right? Because from failed move, you do get fast moves, so that's what it is. We're going to talk about a couple of things: how to find the breakout patterns, what you need to find within the patterns before the stocks breaks out, which is kind of key, and how you're going to manage the trade. Right. So I mean, basic definition or breakout definition is when a price is going to move past a support or resistance with heavy volume and increased volatility, right? So three things I want you to really take a look at is number one, it has to go through a particular support or resistance that you can see the stock is hitting a particular price and it keeps on getting rejected, and when it goes through the particular price, you want to see two things. Number one is you want to see a heavy volume, right? You want to see a lot of volume when when a particular stock or particular currency is trading through the resistance support levels. You also want to see an increased volatility. When you talk about increased volatility, we're talking about an increase in the range, right? So maybe the stock is trading generally 50 cents range. Maybe on the trading you want to see two times the range, or maybe an increase at least more than two times the range, right? Because that's where you want to see the institutional buyers are actually interested in the stock. If the stock generally trades about 50 cents and today trade about 50 cents as well, you know what? There's not a lot of volume to move around, and chances are there's not a lot of people anticipating the move. So chances for those kind of moves, failing is highly likely as compared to for a stock which, think about it, the stock is breaking a key level. First of all, you need a lot of volume to move it, so there has to be an increase in volume. If there's an increase in volume and if the stock doesn't really move, then chances are it's going to fall back and it's going to be a failed breakout, right? So let's go. So for breakouts to happen, first of all, you definitely want to see a trending market, which is you want to see the stock trending to the upside or downside. Previous videos I've talked about in terms of how to find trending markets. The easiest way is depending on the time frame you're looking at. If you're short a time frame, then you're looking at a 20-day, a 10-day moving average. If you're a longer time trader, you're looking at maybe a 50-day or 200-day moving average. So trying to find the slope of the particular moving average in terms of whether it's going to the upside or downside, and depending on where it's trending towards and the price is above or below, you want to trade accordingly and trade in the direction of the trend, because once the things are in motion, they tend to remain in motion, right? If you're trading in the upside, then you want to see a higher lows into resistance. I have a few pictures on it to show you what I really mean. So you want to see things to be tightening up near the support or resistance, right? You don't want to be a whippy action. You want things to get tightened up. Tighten up in the sense that the volume is drying up. So not a lot of people, whoever wanted to buy, they're kind of giving up hope that it's not going to break out, and there's just no buyers, right? You also want to have a tighter range. You don't want to see big ranges going into the resistance, because those are highly going to be breaking a failed breakout. You want to see tight ranges, really small ranges. So let's say the stock generally trades 50 cents. Maybe you want to be trading at 25 cents or 20 cents, right? So the range is getting tighter and tighter. More people are really getting frustrated, and once the break happens, then you have all the people who are frustrated now getting back in, and people who are waiting for it getting back in. That's where you see this big gigantic breakouts which happens. So some of the breakouts that can happen really is the idea A, which is simple things getting tightened up, right? Then ascending, moving chart, so you can see this clear breakout, but things don't really go as planned, right? So you will see situations like idea B over here, where the stock moves up, goes down, tries to break, goes down, the third attempt, and then breaks down. So now look at this. If this is the third attempt, right? So everybody who thought it the first time is gonna go, doesn't go. Uh, the second time tries to go, it doesn't go, and now everybody who's over here, who put their stops over here, like everybody got flushed out, and they maybe like, hey, you know what? Maybe this stock is gonna go down, so maybe they're trying to go short. So all those people who got frustrated got stopped right over here, and all those people who are trying to short over here results in this big gigantic push up, because from this is a false breakdown, you get the fast move. So let's look at some of the moving averages some of the charts that we want to take a look at. First one, we want to take a look at the Apple. This is one of the most popular trading stocks around. So you see the stock going up, right? Goes from 105 to 120, tries to go back up, and now everybody who thought over here down on the downside that think, hey, you know what, it's going to go and fall apart. We want to take a short position on here, but once the stock actually reestablishes the $110 level, you see this move on the upside from 110 to 150 in just a matter of months, right? Same thing that you can see on here. I mean, if you see on this bigger time frame, you will see everybody who is, I mean, looking for this to actually, they might be looking at this as a right shoulder, a left shoulder, a head, maybe a right shoulder forming over here and trying to short it over here, looking at this as a pattern, right? Head and shoulder pattern. Once it actually violates this 160 level, you see an up move over here again. The other one you're looking at is the FND. So once you see this moves from 25 bucks to 40 bucks, and things before it, I mean, the key level is around $45 level, right? So you see things starting to pretty tighten up over here, right? So when it actually breaks through, for example, in this Apple, whenever you see the break of the range, it has to be a pretty substantial range, right? So the range is bigger, right? You see there's all these smaller once a real breakout happens, you see a bigger gigantic move on not only based on volume but also on the range, right? Same thing over here. Once you see the volume and the range supports it, right? Same thing over here. You see the volume and the range supports it, right? So this one actually breaks out, pulls back to 45, makes another move, and before pretty much doing nothing right now. Something like Canada Goose, if you see on here, this $22 level is a key level, right? You see this up move, people trying to short it over here, and now it's trying to become pretty tight over here, right? The volume has dried up. Once the move goes to 22, you see this gigantic up move based on volume as well as the range. And I mean, the way you can really, the entry really is going to be the break of 20. If you are more conservative, you want to see the break to actually happen. And there's two ways to enter. Either you enter right on the day after the breakout, or the week after the breakout, because you look in the weekly time frame, or you let the stock to actually come back and maybe about 50% of the big range, you want to come back and then enter your positions, right? Similar thing that you can do, let's say you're looking at this ATHM, you see this move on the day of the actual breakout, you see this gigantic move on bigger volume, higher range. So there's two ways you can trade it. Number one is you go in right after the next week, right? You put in your buy order over here and put a stop below $30, right? So you put in 42 odd and you put a stop at 30, or maybe you want to play it more conservatively. You go and enter at about 42 and put a stop down here. And if the stock were to actually pull back again, so you go with two sizes, right? One half size you enter on the week, this is a weekly chart, so enter on the week after the breakout, right? Breakout means there's a significant volume surge and there's a significant range. Right after it, you enter, and maybe when it pulls back, maybe about 50%, you enter your next half, right? So you are reducing your average, but the really cool thing is, you know what, if the stock really starts taking off, you're not missing the move. But if the stock were to come back, you can actually reduce your size and double up. So half on here, half on the pullback, and then you can actually enjoy this right over here. Right, same thing on here, ETHM again. The first move, So this is the move up. You see this. I mean, all those who are trying to buy it over here, thinking that it's going to break out over $70, everybody gets flushed down over here under the moving averages. So everybody, I mean, from the long positions becomes a short position because people think, hey, you know what? This session are going to go up. This might actually be a fall, might be a breakdown. So people are trying to short it. And once it actually goes over the range over here, once again you see an increase in volume, an increase in range, and then you see this upside going over here. All right, so hopefully you guys learned something about it. If you like the video, please like and subscribe. Keeps me motivated to make more video for you guys.